Hello.
Hi.
Hi. Welcome everyone. We just gonna wait more minutes.
Yeah. Your camera is not on, Jigar.
5 minutes.
Jigar, my name is Vikas. So basically, I'm using my son ID, Archit Kapoor, because he has a professional Zoom. That's why.
Okay. Yeah, no worries. No worries.
Yeah.
No worries. Uh, okay. So we have almost like 8 participants, including me.
Okay.
We will wait for more people. If you have,
Right.
uh, uh, let's see. Anybody has any questions so far?
Jigar, just I want to understand how you read the charts and how you figure out those points, what you call the resistance point and those
Yeah.
support points, right?
Yeah. So that's what we're gonna basically do today. I
Yeah.
hope everybody got what you call uh, trading view. Just give me because I'm kind of responding to the other people too. So
Mhm.
just give me this is just a second.
Hi, Shabir.
Uh,
So all of us are here from Ontario. Some are out of the Ontario.
they are like from different places, right? Some are from Canada, some are from US.
So you are from which part of Canada, Jigar?
I'm from Winnipeg.
Winnipeg. Okay. Pretty close to me. I'm from Ontario.
Okay, yeah, like 1 hours. Okay, so let me see if I can share my screen. This is my screen. I'm sharing. I hope everybody can see my screen. I'm gonna transfer this.
Yes.
I'm gonna
It's
transfer
pretty
this.
black screen.
Okay. Can you see now?
Now,
Okay. Wait. Uh, I would request everyone to kind of if try to make like unnecessary. Don't make kind of try to keep yourself mute in case, as long as if you want to ask questions, sure, go for it and
yeah.
unmute yourself. But just try to minimize the noise. Can you see this screen? Which
Yes, we can see now.
okay.
Yeah.
It's supposed to be trading view. Okay.
It's,
Is it trading view you are getting or which you are getting?
it's a steps to apply, something like that.
Okay.
Register by clicking on the register link, then log in with the
Okay.
register login ID.
It's
Okay.
for Passport India.
Passport India. That's you shouldn't be saying it anyways.
But no, this is tradingview.com.
There you go. This is what we want. Yay, trading view. This
Okay.
is okay. Now I'm gonna see if there anybody in the room who is not been admitted because there are so many people who are gonna be late joiners. So admit. Okay, I'm gonna keep this one here so I can. Okay. Now I hope everybody can see this part.
Yeah, I can.
Okay. Now the trading view I'm using is a free one, so make sure like everybody use it. It's free. Just open up your account and you can basically use for the three indicators. uh, this is pretty good when you want to do some like charting. It's very good for the charting, so
Okay.
please make sure you use it. um, this is like say for an example Pinterest chart. I'm just gonna show it. Who is like who is this one? I'm just gonna mute everybody. If you want to ask question, please go for it. So not everybody get disturbed. So if you have any questions, by all means ask it. Okay. Okay. Now where is my presentation?
So, Jigar, as you
I'm
said, so everybody can record.
yes.
So, I have
Yeah.
sent a request for recording.
Let me see because I'm pretty new on those Zoom kind of stuff. And so close all stuff. Or admit. I got it. So where I'll be able to get this request. You tell me, and I will.
Okay. I'm not sure. Does anybody know about Zoom where Jigar should be receiving recording requests to approve? I can Google it quickly.
Okay.
Did you put the screens here on the display?
It was there already, but can you see now the pins?
Yes.
Okay.
Yes, you can see the screen.
Pins. Okay, yeah. Because I think, I'm trying to look for my stock presentation, which I would like to go for it, and then I will share it to you guys. Can you see the logical stock now?
Yes, we can see that.
Okay, this is mine. So that's why I say always Tukas. I'm not sure whether you guys know or no.
Okay, so I think
this is
what
me.
I figured out,
Yeah.
Jigar,
Yeah.
you need to go to participant name and then provide the permission to record.
So what's your name?
Dhiren B.
Okay, Dhiren B. Okay.
Hi, Dhiren, how you send a link to request for the recording?
Okay, you
So
got it. You got it?
yeah, so now you have allowed me. So on your Zoom screen at the bottom where you see participants and all, so there must be an option to record.
Yeah.
And before that, Jigar need to allow you to record.
Okay. Jigar, I have sent you also. My name is Archit Kapoor 2002.
Okay, just wait.
Archit Kapoor.
Archit Kapoor, now allow. Yay.
Yeah, so it started recording for me.
Okay,
So.
yeah. So yeah, it's better to have like a backup in case if I messed up somewhere. No, okay, yeah, no problem. Yeah, three people are recording now. Okay, so
can somebody share if somebody only one person can record and he can share the link?
Yeah, that's we will share it.
Okay,
Don't worry. Don't worry about it. But if you want to locally, by all means, go for it.
Okay, thank you so much.
Okay.
Well, can you sell this video later?
Just wait. Okay, let me see. I'm admitting like a couple of people left. So okay, now everybody can see what's logical stock. This is called my tukka. My name is Jigar Upadhyay. As everybody should be knowing me by now because they are taking part in my seminar or knowledge chat or whatever you can say this one. Basically, I am a normal guy like you. I am not like master in any way. I'm just gonna mute everybody. So just in case. If you have a questions or concern, please unmute yourself and ask me any questions if you want. But basically, we are just trying to make sure like other voice doesn't come in between when we are talking. So let's start logical stock. As we know, we're gonna talk about the different topic, and the first topic is we're gonna talk about the candlestick. Everybody knows what is candlestick, right? Hello, who's this? Hello. I am getting voice from somebody. I don't know who is that, but
I think it's coming from Harpreet. Sorry, Harpreet. But if you can unmute him.
Yeah, so I can unmute it. Yeah, I'm gonna just mute them in case. Okay, and this is supposed to be my presentation. This is the PDF file, but let me just figure it out. Where is my presentation went? Which is here. Okay, I got it. Now, so everybody knows candlestick. I'm gonna go quickly through for the people for the candlestick, how they are formed, and I will show you in the chart how the different candlestick merge together and become the one candlestick. Okay. So now, if you know these things like candlestick, there are two kind of candlestick which we're gonna see. One is like a bearish, second one is bullish. The only difference between those two is like how they open and how they close. Okay, that's the only difference between those two candles. So if you are bullish, the bullish or the green candle will always, what the heck this, okay, this is kind of weird here.
Sorry for
This is kind of weird. I don't know. I'm gonna show you how it works. This is
sorry for intervening, Jigar.
Yeah.
Can you please tell me who is recording the session so that at least we'll be aware of it, who to reach out?
I am recording. There is Nitish, sorry, Archit Kapoor is doing, Dhiren is doing.
Mhm.
So a couple of guys are doing. If you need a request, let me know. I will
Sure.
permit you to do it.
Yeah, please, if you can do that, that would be really helpful for me.
Yeah. What's your name again, brother?
Nitish Kalra.
Nitish Kalra. Where
Yeah.
are you, brother? Here. I cannot see.
I think one person can have the ownership to share with everybody for the recording, please. That will be awesome.
Yeah. We will share it.
Thank you. Thank you.
Okay. So
Yes, I think I got the access now.
okay.
Thanks, bro.
Yeah, and so if be active in the group too. If somebody wants the link or
Of
something,
course.
just
Of course. Sure.
kind of provide, because somebody James is asking for the link, and
Sure.
if you can just provide that link
Of
to him.
course.
Okay.
For sure. Yeah.
Thank you. So now in how does the candlestick form, specifically, like say one candle which is here. Suppose this is the green candle. Okay. My computer sucks me. Okay, no problem. Okay, so if this is a green candle, for an example, that will open from here, like bottom. It will go all the way to the top and close it here. Okay. Sometime what happens, candle opens here, it comes down, then it goes up, and then closes here. Okay. So closing is always an important stuff. Okay, remember, closing is always important, and where the candles are placed is very important. This is very basic knowledge I'm sharing. If it's the bearish candle, it will open here and it will come down and close it here. Sometime it opens here, goes up, comes down, make a low high. Okay. Yes, Vinit, what was your question? Just unmute yourself and ask the question. No need to raise your hand. Hello. Hello.
Sorry, Jigar. Jigar, can you give me also permission? Sorry.
Vinit, you said? Okay.
Yeah.
You didn't ask me the permission. You need to ask the permission first. You didn't ask me permission. You need to send me the request first, then I can send it.
Okay, I will do later. Okay.
Yeah.
You go ahead. Thank you.
Okay. Yeah. Okay. So now, as you understand, if this is a bearish candle, it will open here, it will come down, make a low, and then come back and kind of close it here. Sometime it goes up and then fall after like once it opens, goes up, down, close it. So that's how this normally form. Let me show like on a chart how does it looks like it. I'm gonna go pretty quickly on those one. These are the very basic. Everybody should know it. If not, then you need to brush up your like knowledge, because this is like a pretty easy to understand. Okay, so now if you see here, this is I'm on a 5-minute candle. So what we can assume from here, what we can assume from here is the candle open here, like I'm talking about the red candle. Let me just put it down. I'm talking about this candle. Okay, it opened here. Okay, then it came here and closed it. Before it closed it, what it did do is like it made a low. Okay, But when it made a low, that means there is somebody coming to buy at the point. Okay, somebody is coming and buy at that point. Okay, so always remember, whenever you see the candle, look for the wicks, whether it's upwards or the bottom. If you have the link wick on the bottom, that means there is some buying pressure from the bottom. Okay, and if you see the wick on the top, like here, there will be a selling pressure from the top. Okay, now if you see, okay, so now
Jigar,
yeah,
what does exactly mean? You mean by weak? You
week.
mentioned
Okay,
weak, right? Yeah.
okay, so now just please, there is somebody message me, I am not sure who is, I don't have the number. So the candle has a formation, whatever the red part or the green part you are seeing is a body, whatever the small part you are seeing is called a wick. Okay,
Yeah.
so when we see the wick, like say if you see here, just give me a minute. So here, now if you see, those are the wick. Okay, I'm just gonna show what is wick. This is wick. Wherever you see the like small push, like a big stick, is called a wick. Okay,
Mhm.
now if you see this green part is a body. Okay, anywhere. So whenever I say, when you have the wick on the bottom, like this one, like here, that means there is some buying pressure from the bottom. Okay, now when you have the wick on the top, there is some selling pressure. Okay, I'm not saying it's gonna be like, but if you have the longer wick like this big and you have the small body, that means there is a pressure from the top side. Okay, now okay, I will come to your conclusions. Let me just finish what I'm trying to say. Can you just somebody message in the group the link for Zoom, because somebody's trying to come in last 10 minutes and he's not able to join. His name is James in the batch 1. Okay, so what does it mean? So now you need to figure out who is in the control. Okay, when this is like a body, and then we have the big wick, and it is, if it's forming at the resistance level, you can see that, okay, now bear are in control. Okay, so let me show you if I can find some good example for big wick. Okay, let me show you. Let's see here.
So, just it could be a very basic question, but
Yeah.
when you see this weak,
Yeah.
weak or buying pressure or selling pressure,
Yeah.
so buying pressure means it's a bullish
Yes.
in near future, right?
Yeah.
Near future mean in next few minutes,
Yeah.
right?
Yeah. Like he's coming, like, let's say here, look at this wick, like there was a buyers here, and now if you see here, there is a wick here, it tried to overcome. And can you just unmute yourself, whoever has like a background noise, please? So now if you see here, this part here, there is a selling pressure, and see what happens after that. Okay, do you see what happens after that one? There will be the resistance. We will come and talk about that one, how we can figure it out, whether this week is the bearish are in control or not. Okay, but what I'm trying to say is, like, longer the week, more buyers or the seller are in the market. If the week is in bottom, understand there is a buyers are in the market. When the week is on the top, which is longer, that means sellers are in control. Okay, let's see a couple of more week if I can find out. Okay, this is a big Marabuzo, which we'll talk later if we have time later. Let me see if I can get a good week. Okay, very good week. Okay, no. Okay, this is Marabuzo. Okay, here. Look at this quick, right? We're gonna work. We're gonna learn about this candle. Look, it was going in, but then there was a selling pressure, and if you see this portion here, it become like a resistance. It couldn't cross it, and then the market fell. Okay, so now what kind of wicks you are looking into? What kind of candles you should be looking into? Usually, like whenever you are looking for the candlestick, always remember who is in the control. Whether the buyers are in control or the sellers are in the control. Okay, where the candle is formed, at the resistance level or at the support level. Okay, and remember, each candle has some story to say. So always look for the candle and what they're trying to say. There are the different kind of candles which will be very helpful for you to know. There are like hammer or the inverted hammer, piercing line, engulfing, bullish salami or the bearish salami or the doji. How they form, we're going to talk here. Okay, so now let's talk about the bullish. The first one is hammer. Okay, what did I say? Look at the bottom. Okay, when you have the big wick on the bottom and the small body, that means like seller tried to push the price down, but then the buyer came in and that they took the price up. Okay, let me show you on the chart if I can show here. In this case, what happens is, and always remember, don't worry about the how does the color formed. Okay, green, red doesn't matter. Always look where it formed. Okay, always look for it. If the hammer forms here on the top, it is of no value, but if the hammer forms here on the bottom, it has a value. Now I'm gonna show you here. It's not a green candle. Okay, it's not a green candle, but if you see here, this one formed on the bottom, it has a value, and then it came up, price went up, and now this will be a call as a hammer. Yes, but look at this is pure hammer. It didn't work, but the bottom, it worked fast, like it worked like a charm. Okay, now let's see if I can find some. Yeah, look at this one. This is a hammer on the bottom. Okay, this is hammer on the bottom. Now let's see if I can find some here. Now if you see here, sorry, this one can be termed as a hammer if you want, but it's like already up. So sometimes it works, most of the time it does not. I would say this is a hammer. Okay, it worked. White. Okay, and let's see the last example, and we will go for the different charting too. Okay, like a different stocks. I just picked up this one. Now this is hammer. Okay, try to identify those hammers. Okay, and it has to be on the bottom. If they are in the bottom, you will get a good name. Okay, you will get a good result. Now always try to remember, whenever you have the smaller like a body and the bigger wick, whether it's from the top or the bottom, always look for the second candle before you get into the trade. Okay, what do I mean by is, because sometimes what happens, this gives the false signals. So always look for the second candle for the confirmations. This second candle has to close above the closing of that candle. Okay, above the closing of the candle when you are talking about the bullish candle. Okay, so now for an example here, you got the confirmation by this candle. Now you can put the stop loss here and write the trade. Okay, and when you do so, you will get at least 1 to 2%. If you get like 8.80% or 1%, you are good to go. Okay, if like in the intraday, I'm talking about intraday. When you get about 1% or like a 2%, it's a pretty good risk reward. And now, in order to get this 3%, how much was your risk? Your risk was about 1%. So you are risking 75 cents, and now you almost got about $2. So that was like a 1:2, 1:3 risk ratio. Always look for how much you're gonna lose. If you lose, how much you're gonna lose. That's how you make the money. If you lose, if you are like putting $1,000 on the line to get the $100, it's not a good trade, because your risk ratio is like 10-1. You're putting $10 to earn $1, which is very bad risk reward ratio. Always remember, for any trade, and you won't lose much. Okay.
Hi Jigar, just
Yeah.
quick question.
Yeah.
For intraday, do you use a 1 minute candle or 5 minute candle?
5:15. If you are like doing, a penny stock, like a $2, like a $1.80, 1 minute by all mean. But for the longer, it's better to do the 5 minutes. The reason is like, look, this one, like, okay, this is the trade. Let me just say, this is the 5-minute candle. Okay. And now if I turn it to 1 minute candle, let me see how much. See, look at this, how much time it gonna give you, like too much noise, right? How does the 1 minute and the 5-minute candle form? Okay, let me see. Okay, this is the 1 minute candle. Okay, so this is the opening of the candle. So 1, 2, 3, 4, and 5, and so this is the closing of the candle. Okay, this is the closing of the candle. This is the high of the candle, and this is the low of the candle. Now, if I turn into the 5 minutes candle, our candle should be formed in between this level. Okay, if it forms, that means we did it correctly. If not, then okay. Check it out, the first minute candle which I was talking. See, this is how the candle formed: the opening, closing, this was the low, this was the high. Okay.
Okay.
Yeah. So what I mean by is, like, with the 5-minute candle, like a 5-minute candles, you get the clear picture. With the 1 minute, you will get a lot of noise. If many people do use 15 minutes candles, half an hour candle, 1 hour candle, even for the intraday, because they want the confirmed rate. But for what I feel like, 5 minutes and 15 minutes are the better. Okay, now look for the second candle. Second one is the piercing line. Third was is engulfing, bullish harami, and doji. Those are the most important things. How does it work for the piercing line? You will see the red candle, and the piercing line, this is the red candle and this is the green candle. You will see the at least this green candle will be above 50% of the previous red candle. That means there are chances that this is a trade, like the trend is changing. Okay. Does it get, everybody understand that one? How does the trade
Yes.
trend changes? Okay. If I'm too fast, let me know, because sometimes I go too quick. When it comes to engulfing bull, that means like there is a candle which is red, and then the green candle which engulf this the previous red candle. That means, like, here on the first one, the bulls are in control, but the second one, the first one, bear are in control, and the second one, bulls are in control, because they are now getting like engulfing, they are eating the bears here. Okay, you can see that one. Next candle is bullish harami. That's a Japanese word. Harami is a Japanese word called as a pregnant. So when you see the red candle and when you see tiny green candle in it, that means there is a change are coming. So that means like bulls are like getting born inside the bear. Okay, this is called bullish harami. This is doji. That means like there is nobody's in control, is indecision. We don't know who is in control, whether the bear are in control or the bulls are in control. However, if this doji is formed on the top, that means bear will take a control. If the doji forms on the bottom, then the bulls will take control. How we'll check it on the chart. in like the reverse of those candles will be like your bearish candle, and we will check one by one on the chart. Okay, I'm going too fast because those are the very basic knowledge you need to like know. And what I'm trying to like teach you or like say knowledge is like you need to know how it formed. Forget about color. Don't pay attention to the color. Just see where the candle of your interest is formed. Okay, always look for that one. Okay, now I'm gonna remove all those charting which we don't need it.
So, quick question. So,
Yeah.
this we are talking about a particular stock. Does this apply to
This is for
overall
everybody.
index?
This is for everybody. I can like, let's change to the, what stock you want? Google.
So, if we want to see that where exactly the market overall is going today,
Yeah.
later, so
Okay.
does it apply same there as well?
Yeah. Let's
Okay.
say index. Let's say index. What index you want? SP. Let's key XP. ISP 500. This is not. This is not SP 500. S&P. Let me see. Can you just please? Okay. Capital.com. This is SP. Okay. This is SP overall day trading. Okay. Now, if you see, this is the like, holy moly, right? Always like an uptrend. It comes back, but it's still an uptrend. We're not going to talk about that one. How does this trend line and everything form? But this is an uptrend. Now, this is like a day chart or like a day frame. Okay. And if you see here, every time the way I was saying, you see there is a buyers, there is a buyer, there is a buyer, there is a buyer. Okay. Right? Does it make sense? And if you see here, the doji, which you are talking, like this is a doji, this is kind of doji, a doji, I would say this is a doji, this is a doji as well, and this is a kind of doji as well. What does doji mean is like, you will see the small body and you have the big wick or very tiny body or no body, and you have the wick on the both sides. This is called doji. Okay. So you will see here, like I'm not just trying to show, like look at the wick always. Okay, look at the wick. It's forming. This is like a hammer, but this is like a doji. That means like market gonna fall a little bit. You know, when you, this is the bigger time frame. Okay, this is the bigger time frame. This is the not the smaller time frame.
So Jigar, weak below the body means, there are a lot of buyers,
Yes.
right? They're
Yeah.
buying it.
Yes.
And if it is above the above the body, it means people are trying to sell it off, right?
No.
Market.
That if you see the green body, that means that there are more buyers than the seller. Okay?
Yeah.
There are more buyers than the sellers. Like if you put the volume, you will see there is a lot of buyer. So in here, if you see here, this part.
Yeah.
Okay. Now, if you see here, like this is the longer time frame, but if you see here, like this part, like this is a hammer, right? For an example, our hammer is here, and this is the point. Now, if you see the how much it went up, like from the top to bottom, it went up like 8% or like 243 points, right? And then it fall. Market gonna fall. Like the market never runs. Remember, market never goes like this. It will always goes up, down, up and down. Even if it's a trending market, it will always up and down. What we as a trader has to do is try to catch it here, here, or here. If you are a bull, or if you are a seller, you try to catch them here, 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 and here. That's what we're gonna do it. Okay.
So if you won't mind, can you please give me an example of, by taking one candle and showing like, if there is a body, it is going up, week is going up, then how would market respond to that?
Okay. So like here, check it out. This one, this is a hammer. Okay.
Yeah.
This is a hammer. Right. And what happened after that one? Market went up. Okay. but market doesn't gonna go like down right away. It will take a pause. Okay, it will always take a pause like here, and then it will fall. Okay, this is the bigger time frame. That's why you are like seeing only one candle. But when you go deeper into this candle, like 15 minutes, let me say 15 minutes, and where we did draw that one, volume, I don't need it. Can I see? Okay, now let me put it on an hour so I can find it properly. Okay, so now this is like our hourly candle. Okay, this will make kind of gives proper idea. Look at this one. This is a hammer after a downtrend. Okay, and what happens? It went up here, and what happened here? There was a resistance here. It took the resistance from that area, and the market fall. It couldn't sustain. Why is taking a support here? If you see the support, it's taking the support here.
Jigger, one question. When the picture you're showing here, that the green hammer went upward. What's the time difference when it's reaching on the peak?
This is an hourly candle. Okay, this is like an hourly candle.
It's an hourly candle.
This is
So
candle.
you can come out, you can trade and you can come out. You make it.
Yeah. No, you go for the 15 minutes or the 5 minutes candle. Okay, you always go 15 minutes and the 5 minutes candle. Whenever you're looking for the support and the resistance, go for the like higher candle. Whenever you are looking for the trading, go for the 5 minutes or the 15 minutes.
15 minutes candle. Okay. Thank you. Thanks.
Right. So now this was the next hour. Look, we took the like when we were checking, we took the support here. And what exactly happened here? Let's see. This is the 5 how much? 5 minutes candle. This is a 5 minutes candle. Look, the market, the way I was saying, like a hammer, is a hammer here. Market, what it did do is it fall. It found a resistance because it was trying for how many minutes? So it was on the range bound, right? It was on the range bound. That means it was trying to go up. Okay. It was trying to go up. Remember what I said, like market doesn't go like boom. It will take a time. If only pump and dump will go boom. Okay. The real market will go slowly. It was trying to go up, and it was facing resistance on the top, right? What happened after that one? This candle, which was a hammer. Yeah. What did I say? Where it formed is most important. This was on the top, right? If you see, this was on the top where it formed. And now after that one, what happened? Market came down. Okay. Market came down.
Yes.
Right. Now, if you see, now you found a wick here, right? There is a wick here. So market tried to come, but they found the support here. Now, if you remember piercing candle, what I told about.
Yes.
If you see here, this is the body. Like I'm gonna remove this horizontal ray, so this is the body of the red candle. This is the body of the wick. And now, if you see, this is more than 50%. What's the price? What's the candle size? The candle size is about $8, 8.8 for an example. Yeah. And look at the size for this one is about how much? 5, right? It appears more than 50%, right? So that means trend is changing. Trend is about to change. When you can go, you always wait for this candle high, because this was the high of that candle, to break. And look at this one. When it break, the market trend upwards. Okay. Does it make sense to you guys?
Very impressive.
Right? Very always impressive. Wait. And now always your stop loss will be here. Okay. You never know. Because we are seeing the made chart, then only we can assume this one. But always, if you are going, if you are a risky trader, you can always go here sometime. But your stop loss should be here, not below than that. Just like a couple of points below that particular wick. And now the confirmation, do not, go with the FOMO, like, fear of missing out, because as a new trader, we do tend to do that one, that we will miss out. And trust me, you won't miss out. Okay. There are a lot of
So-
opportunities in the market always. Okay.
One thing to understand here is,
Yeah.
sorry, this is Harshal.
Yeah.
Jigar.
Yeah.
One thing to understand here is like this is basically very good, a best practice for a day trader. Okay.
Yeah.
Very good best practice, because that's the only way you can go in and out. That will give you a confirmation like, hey, looks like the trend is going up. You can go and play with that, or you can short with this stock as well. So it's always depends on how you're looking at it, but very best practice for the day traders.
Okay. Yeah. Thanks, Subhai. And one more thing here, like, because this is the same chart, right? Let's say how many opportunity it can give. Now, if you see here, this one, this candle is not a bullish like a harami, but it can give the indication that the trend might change. Okay, trend might change because it's a smaller body against the like a red candle. It can give like idea that okay, the trend about to change. And when you see the second one, if you see this one, this is like a more of a piercing candle too. Okay, this is the piercing candle too. You go long, but again, every time you need to see like there might be some resistance somewhere. Okay, because it came downward. And sometime this also can be like this part can also be avoided when you use the Fibonacci. When you use the Fibonacci, you can avoid, okay, yeah, it's not crossing my 50%, let it fall down. That's another method we're going to learn next time, how you can avoid trading this part. Okay. And the like technical analysis is not just one go. Okay, it's not like, oh, one technique and go. You have to merge so many different components to make a good trade. Okay, is price action is all about the whatever I am trying to teach you, or like a shared knowledge is all about price action. Okay, is not nothing else. I'm not using any indicator as of now. We're gonna use the indicator later, but this is all price action, and this is the supremo in the market. But like earlier you learn, better for you. Later you learn, you will learn after losing so much money. Okay, there is no indicator. All the indicators are based on the price. The price is not based on the indicators. Okay, so remember that part. Now, so does it clear an idea? How does it work? Anybody has any questions so far for the candlestick? You have to back test it, everything. Okay, please. So
Jigar, this red candle means there's a lot of sellers in the market,
yes,
and the green means there are a lot of buyers.
Yes, yes.
Okay, and if the week is going down, it means they are trying to buy. They're trying to buy more, right?
Yeah, if there is a week on the bottom, that buyers are in control. If there is a week on the top, there is a seller are coming in the control. Okay.
Okay.
And again, remember the importance where it's formed, whether it's formed near the resistance or the support. Those are the two important factors. Okay.
Jigar, one main thing. Even if you want, I want to buy some stock like which is not a penny stock like the PLTR. This can give you good entry point. We can see which are the lowest points you can enter at that time.
Yeah. Let me say PLTR. Okay, you came up and the PLTR. Okay, PLTR. I have some like drawing. I don't know. Probably from a previous time. I don't need it. Okay, so now whenever you are the next topic, let's go for the next topic, and I know I will come to your PLTR. The next topic is time frame. So everybody struggle what kind of time frame we should use. Okay, remember, the smaller the time frame, more the noise. Bigger the time frame, lesser the noise. Okay, price always follow the bigger time frame. It will come and down, but eventually it will follow the bigger time frame. So if I say, if you want to invest, which is the biggest time frame, like which is the bigger time frame? If you want to invest for a long term, what is the biggest time frame you can use? Anybody want to say?
You can go
daytime.
Daytime.
No, monthly. Monthly and weekly. Monthly is the more powerful than the weeklier. Weeklier is more powerful for the day time frame. day is more powerful than the 4 hours. 4 hour is more powerful than an hour. Hour is more powerful than 15 minutes or the 30 minutes, and vice versa. Okay, that's why I say like 1 minute has a more noise than the 5 minute, and if you go the 15 minutes, it has a lesser noise than the 5 minutes. Okay, so now let's say Tesla. Okay, because it has like a some. Look at the Tesla. Right, this is the monthly time frame. Okay, it's going, but now on a monthly time frame, I'm just gonna, what you see here, this is engulfing. Okay, this is kind of engulfing, this coming. Now go to the smaller time frame now. Okay, when we went to the weekly time frame, okay, do you see a red candle between the, like after the good bullish candle, right? Does it make sense somewhere? Like what we learned about the bullish harami, like a bearish harami and bullish harami. You have the big body and the tiny red or the blue, red or the green candle inside the big body is a bullish harami. What does it mean? The bear are coming back to the market. And if you see after that one, it didn't cross the like high, which was 882. It couldn't, this is a weekly. Okay, this is the weekly. We're gonna go to the smaller time frame. It did not sustain for a longer time, right? And here, okay, if you see here, and after that one, what happened? It went sideways for a time period and it fall. And if you see here, it tried to go up on this portion, which is on like 12th April, but it found the resistance because it was already like a seller zone at the time. People are like got stuck here, who are trying to get out from the particular positions. Okay, let's go to the day part now. Let's go to the day part, make it sense. So when you go to the like a smaller time frame, here, if you see, it was forming a pattern. It's called a like a M pattern. How does the M pattern forms? Like M and M. Once the neckline of this is broken, it becomes bearish. Okay, it always becomes bearish, and usually it comes from like a bottom, taste it again, and then falls. That's how the market works. Okay.
How can you predict this U shape that they'll go fall? It's going to fall
because that's how the pattern works. Okay, just hold on a minute. How does it work? Okay, I'm gonna tell you. So like say for an example, I'm gonna take off this Tesla. I'm gonna remove everything. For any pattern to work, say this is like a pattern. It went up. Now it found the resistance here. Then it fell. But there was a support here. Then when it goes up, now they usually find the resistance here. Why the resistance? Because whoever bought it here wants to get out. Okay, the people panics there and they say, okay, you know what, if I'm making break even, I will get out. So what they do, they get out from that part and then it fall. Okay, but what happens is people who missed out here and here will try to buy it. Okay, no, it went up, so let me buy it here, because they see, okay, this is the support area. That's why it's a support. But what happens, like sometimes the people who bought it here probably sold it here and they don't want to buy here, then market falls. Okay. And short sellers are comes in the control here. When they come here, they take the market price down, but they have to cover somehow. So that's why they comes and it takes the trend line again most of the time, and then it falls. So this is how the market, all the pattern works. If you know these things, you can predict any tukas if you want. Okay, this is the basic you need to remember. Okay, it takes a time to understand these patterns, but this is how the market works. Okay, does it make sense to you guys, everybody, so far?
So far so good.
Yeah, that's good.
Okay, so far so good, right? So this is the bigger time frame. Okay, this is the bigger time frame. Let's go to the smaller time frame with the Tesla, because as this is the lady love for everybody in the market, right? Now, so this is like an hour. Let me go to the 4-hour time frame. Okay. 4-hour time frame. Now, this is okay. This is okay. This is called a what you call distribution phase. Okay. The market has a 4 stages. Okay. Let me just tell before I go. This is, you need to remember if you want to kind of go. So market has a like a 4 stages for any stock to go up and down. First is like a consolidation where the people like the big money is buying cheaper. Okay. Then it booms up. This is called a trending zone where the retailers are coming into the market. Once it reaches to the certain points, it will start consolidating. Okay. This is called a distribution phase. What does it mean by? The big monies are offloading their positions and retailers are buying in a hope that it will go further up. Okay. Once this consolidation is done, it will come to the downtrend and then it go back to the like a consolidation phase again. Okay. This is how most of the time market works. This consolidation period, the like distribution period varies. Nobody knows how long, but it varies from one side to the other side. Okay. Does it make sense, everybody?
But sometimes, some
Yeah.
stocks winds up, then
Yeah.
they consolidate, then they go further up.
Yeah.
Like
Yeah.
what happened
Okay.
with Neo. It started from $10, consolidated on 18, then 25,
Yeah. Yeah.
then
Yeah.
30.
That's why I say like nobody knows. But for that one, what you need to know is, for say for an example, I'm going Neo. Okay. When I'm going Neo, this is like a day trading, like okay.
Yeah.
For the Neo, if you see here, it
Yeah,
was
I'm talking
always okay. Okay. No, I'm coming on that one. How you can figure it out, what it does. Whenever the market goes up, like if it's in a trending market, what is called a trending market, it will make a high and the lower highs and the higher again. This is how it goes. Okay. If it's an uptrend. And so if you draw the trend line, it should be like this. It should make the higher highs and higher lows. Okay. This high should be higher than the previous high, and this low should be higher than this low. That is called a trending market. If it's doing like this way, it is a downtrend. Whenever you see the, and I'm talking about the smaller time frame and the longer time frame, we will discuss about that one later. But this is how it, so this is making a lower lows, lower highs and lower lows. Okay. If you see here, it's making a lower lows and the lower highs. So like this high should be lower than this high, and then vice versa. Okay. You will know. Now let's say how does the Neo did, because this is also a darling for many people, right? So if you see here, does it make sense here? Right? What I was trying to say.
Yes.
Right? It was coming, but it was taking a support. It wasn't falling. Okay. And this is also called a channel. Once it broke that channel, it went up. I would have drawn like this way because I didn't know that one. So you can do like, the how to draw the trend line is subjective. It varies from person to person. Okay. It's very easy for me to draw the line because I have the chart available. If you don't have the chart, I would have like drawn this candle, like the charting, like here, like this way, if I don't know this one. So what did I say? Once it break out from the any channel, like once it break out from any channel, it will come back and test the trend line. And then once it comes trend line, test it again, it goes boom. Okay. Always remember, when it comes to the price goes up, most of the time, 99% usually it comes to test the trend line, and then once it comes and go, it will go faster. And when it goes faster, you will see the big breakout than the previous candle. So if you see here, I'm trying to see here, this area. When it broke, it gave the good candle. And now you will like argue like, oh, this is the small candle between here. But again, you need to remember the trend was up always. Okay. So when the trend is up, you don't want to go short on the positions. You can go short for the like a day trading, but you don't want to buy the put. You know what I mean? Like some people wants to buy the put, some people wants to buy the call, some people want to short. You can short it, right? There is no doubt you cannot short it, but it will be like for like just particular like an hour or 15 minutes or like in 30 minutes and you get out. Because if you otherwise you'll be stuck more. If you short it for a longer period, you will like have like a big loss. Okay. Does it make sense so far what I'm trying to give you the concept? Whatever I'm speaking is more about basic, okay? How to read and what to look for the chart. Okay.
Jigabhai, can you say that once again about like if you are stressing it for longer, then you will end up in loss? I didn't get that. I'm sorry.
Okay, so when the market is trending, so if you remember the story of our GME, right? The people were shorting from the top and they were thinking to buy at the bottom, and then they did the gamma quiz, right? Like the short quiz or something. So those like a hedge fund goes shorting for the longer period of time. They don't short for like a 1 day or 2 days. They short for like 15 days or a 1 month or 2 months. Then you like suffer a loss. But if you are a shorter, right, for like a day or a 2 days, you are still good. Always, even if you are shorting, always make sure you have stop loss. Okay, because if you don't have the stop loss, the market goes boom and you will have a suffer a big loss. If you are not a shorter, don't worry. I don't think so anybody who is newbie will be shorting the market. Okay, and if they are shorting, that means like upar wala hi malik hai. Okay, do not always follow the trend. Remember, always follow the bigger time frame. Like if you see this time frame here, see it was always, even the weekly is always kind of trending. If you see here, it was kind of consolidating here and it was good. Now say if you want to predict tukkas for the neo, okay, just kind of guessing, it has to cross 54 level in order to go further up on a weekly basis. I'm talking about the weekly basis, not about the daily basis. So 54 or 55, it will have a tremendous amount of pressure in the future. Okay, that's why when I said into cars, like, get out if you're coming at 54, because it will come down. Okay, it will need a good, like a big candles to go up. Okay, now logo for the smaller time frame. If you see smaller time frame is getting consolidating, like, kind of is taking a support at this level. I would say this is John here. I would make it easier. If you don't know how to draw this line, everything, just go for the line and you will probably get the idea where you need to draw lines. Okay, and then go to the candlestick and try to adjust your line. Okay, it's subjective to like person to person, because if I am here, I will draw like body to body or like week to week. Some people go week to week, some people go body to body. They don't get preference to the weeks. It's all subjective. Is everybody has a different way of doing the trend landing and everything. So you need to figure it out the way you like feels better. Okay, basically. And if you see here, just kind of, because you are seeing, if you see here, this was, anybody can say what this candle was? Anybody wants to take a guess what this candle is?
Bearish engulfing.
Yeah, bearish engulfing. Yeah, bearish engulfing. Yeah, and anybody wanna guess on this candle? What is that candle is?
That's piercing.
Kind of piercing.
Bullish.
Yeah, bullish piercing. The chances of this one to go up is high, but you shouldn't be going in if you want to. Okay, you should be waiting until like the high is broken. Okay, if you want to go long, you need to wait until the 42 is broken. Okay, because it will be act as a strong resistance to get in. Okay,
Why did you say okay, but let me,
yeah,
and then so that will go up.
sorry,
that means like the trend is like on that 42 line,
Yeah.
right? So if it is getting into 42 and still continues, that means it has it possibly would have an like upward trend.
Yeah, so if you see this trend line, okay, if you're analyzing this trend line, I'm just kind of drawing it. So it's coming into the channel, okay, like it coming into the channel, or if you like, there are different ways you can draw the market. And I would say some people will say, okay, this was channel, it broke down, it will go down. Some people will say, you know, this trend line is, this one is the valid trend line, this is also a valid trend line. Like I can draw like so many trend line, okay, I can. So I will remove this trend line, say for an example, whatever the trend line you want to draw, you can draw it, okay. The thing is,
So
you need to follow the,
so you basically you're saying is up to our own judgment and experience.
Yes.
And how you see that chart.
Yes, that's what I'm trying to say. But more the time you spend to the chart, it's easy for you to understand it.
Yes, that's
okay.
true. That's
so for me, I won't bother about the trend line. I will bother about this like support, because it's taking support with this area. As long as it's taking a support from this area, which is which I would say
between 30 to
34,
34.
yeah. So 34, like 33, $34. So 30, this one is this. That's, yeah, between 31 to 35, like between 31 to 35. This is a strong area. And again, when you're doing it, you always look your left. What does it says? Okay, always look on your left here. Like here, see, it went up and then it went up like from here. Okay, like it took a time once it went up and now it's taking support. So this is a strong like a support area for the neo. Okay, whatever gonna happen on your right will happen from the left. Okay, you have to judge it from your left. So now this is a day trading, like this is the daytime, this is weekly, and even in the weekly, if you see, is following the same, it's getting support, this one here. So now if one case is the trend line, which is now I can just see here, I would have like drawn this one like here. See, if the neo had to fall, it has to fall this day, like this week, it had to, right? If it didn't fall on that day, right, that means it's coming to check the trend line. The chances of it to go higher is more. Okay, this is pure tukka, nobody knows it how it works, but chances of it going high is more. It has to come to the 37 level, which it did come 37 level on yesterday, like on a Friday. If you see here and here, it came to the 37.31. And if you remember, I told like this is the good area to buy. 37 is like pretty good area to buy. You cannot get the top or the bottom for any stocks, but you can try to get close to the bottom or the close to the top. Okay, so if on Monday, if the market opens and if it comes to the like 36.85, it will come for a moment and it will go up. If not, then the neo gonna come to the 34. Okay, that's for the neo. Any questions so far here? Everybody got those part, what I'm trying to share knowledge? Any questions? If you have a question, please unmute yourself and ask it, because more the question you ask, better for you. If not, then it's up to you. Okay, I don't want to judge anybody. Okay, any questions? No? Shall we move on?
Ajay, just one question. So
Yeah.
we understand that when you talk about the WIX is telling you the highest and the lowest point where the stock was bought or sold. So what's happening in the body actually? Is this like the buying and selling at that that price?
Yeah. So what happens is like in the body, what does the body says like when you have the green body, usually what it's trying to say is like, oh, I opened here and I'm closing here. Okay, that's the only thing which is saying. What does it say? Like, I have more buyers than the seller. Because if you buy, somebody has to sell it. And if somebody has to sell it, somebody has to buy it. If there are more buyers in the market, then the market, they are willing to buy particular stock at any cost, then the price goes up. If there are sellers who wants to sell it at any cost, the market goes down, right? So if you say Vicoms, right, that was, if you remember this stock, look at those things. It fell like from $100 to the $40 in a day, in like 3 days. Why? Because there were so many sellers but not many buyers, because big company did kind of offload their positions, and it was an uptrend. If you see on a day trade is also an uptrend, right? So that's why the important is your stop loss. Okay, always go with the stop loss, whether you're putting out a manually, you're keeping on a mentally, you're taking on a support or resistance. Because remember, if stock decided it want to go up, it won't respect any moving average, it won't respect any support resistance, nothing. If market wants to go up, it will go up, it won't care for anybody. If it has to fall, it won't care any support, any resistance, because it want to fall, it will fall. So remember, we are not a god, market is the god. Okay, we are this small part of the market, and we don't even move the one tick for any stock. Is the big money which is moving the market. What our job is to get here and here, because the stock wants to go here. We will play in between this area. This is our playing area. Okay, so profit taking is good again, but make sure you go with the stop loss. Okay, any questions so far? Okay, nope. Okay, so let's move on to the different topic, and then we're going to practice on the chart. Okay, we still have one in an hour. Okay, so now the support and resistance. What is support and resistance? Support is like area where you have the buyer presence who are willing to buy your stock at particular time frame, at a particular price. And the resistance is the area where sellers or the shorters are selling the stock. Okay, so how you find out? You can find out those one by the using the trend line or the horizontal lines or the moving average. Okay, any questions so far? What is support and resistance? And we will draw it on the chart, then you will understand what. Anybody wants to say something?
Okay.
Okay, what, who wants to say anything? Any questions?
Jigar, just a quick question.
Yeah.
I'm just wondering, when we talked about the stop losses and everything,
Yeah.
why didn't you put any emphasis on the trailing stop case?
Okay. Oh, yeah, it will come. We haven't talked about like a trailing stop loss yet. Okay,
right.
We will talk about the trailing stop loss and how and what levels you can put it. Okay,
Right.
Trailing stop loss is must. You can put it on the system. You can put it manually as well. This is the best way to kind of take the maximum out from it, but sometimes it doesn't work. Okay.
So another question, you said stop loss, but let's say we talk about long-term investments we do.
Yeah.
So for example, I bought Amazon last year at $1,700, and at that time I had put the stop loss 1,500.
Okay.
And now Amazon is 3,500. Okay. So should I just change the stop loss? Should I just keep it, or
100%, 100%. Why you wanna not keep the stop loss?
And will you still so it might apply to other stocks as well, but do you still recommend that we should be taking profit booking and buy back again?
Like I cannot say anything about that one. The reason is because like it's subjective. How much profit you want to take and how much you want to go long. Okay, it's end users capacity, like a holding capacity. But if you see here now, this one, this is consolidating. Okay, remember, this is the consolidating. If Amazon has to go up, let's say on a weekly basis, let's say I'm gonna do on weekly basis. This is like, because it's a big stock, so it's consolidating between like 600 or 700 areas. On a monthly basis is also consolidating, right? in order to Amazon to go up, okay, like this is on a daily time frame, it has to break this level, which was the previous high, which was about 3600, okay, almost
Right.
3600.
Yeah.
It was the previous high, and if you see, it fell after that one, because whoever bought here wants to get out, okay, they don't
Right.
want to kind of hold. So if the Amazon, if you want to like be in Amazon, you can get out, like put a stop loss around $3,400, and
Okay.
it might touch, it might go up. If it has to go up, it has to break 3600, and then it will start a new journey.
Okay. Right.
Okay, but you shouldn't be keeping your stop loss to
Yeah,
the
makes
1500.
sense.
Your stop loss should be, at least if you are conservative long term, keep it 2600, 2700, and it won't be touched, because it took the support
Yeah. Right.
at this 2800 level. Okay, and it's not just one time, it has taken support like many times. Okay,
Right. Yeah. Thanks.
right, because it took here 1 2 3, it took so many times. This is like a strong support. People are not letting it go down below the 2800, right? So
Yeah, that's good.
put it like 2800, let it ride. If not, you can sell it. But this is like a very make or break, because if it goes from there, chances of it to come to the 3000, what the level is here, okay, 3300 for the Amazon, and then the 3067 level is pretty much high if the market falls. Okay,
Okay.
if market doesn't fall, it gonna get the new journey, and once it goes the bigger journey, you can see the market to make at least 20% on top of this one, at least on the Amazon. Okay, at least 20%. It will go more than that, but
Yeah.
nobody knows. Okay, nobody knows the top or bottom, but okay.
Yeah. Thank you.
Now, so what I was talking here, support and resistance. Okay, so support is the area when everybody is buying, resistance is the area when everybody is trying to sell, offload their positions. Okay, so let me just keep this one, and if you see, okay, let it more, make it more interactive, and very easy for you to understand. Now, do you see there is a wick? I'm gonna take this volume off because I don't need it. If I draw, this is horizontal line. If I draw the horizontal line, can I draw my horizontal line here? Okay, right, and I can like try to, so if you, what does it mean is like, whenever the price coming into that close to that area, because this is like a big stock, right, it can move like $100 in a day. Whenever this price coming to that area, you will see the like long wick, right? That means the buyers are present. Okay, here too, buyers are present. Does it make sense? Hello? Yeah, or if you want to just like if you don't, just put it on a chat box, or unmute yourself and ask me the questions, because I just want to make sure I'm not talking to back myself. I'm having some interactions too. Okay, 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 yeah, because we're gonna finish until like supply and demand zone and the trend line, the horizontal line, up to number 9, and then rest we can finish for the next time, because this is what is more important. This is more of a basic. So can we draw this trend line here, like a horizontal line here? And can I draw the horizontal line actually here? Why? Because it didn't give the closing. Closing is the most important part of your trading journey. Okay, always look for the closing. Where did it close? Okay, this one gave a false breakout, but that's okay. That's how it works sometimes in the market. It gives closing below that one, and if you want to like more precise, go to this like a line, and you can always try to, if you don't know how to do the trend line or the anything, just go to the line chart and you can do it. And say for an example, if you're doing like this, go to the like a candle chart and then adjust it according to your style. Okay, according to your style, go and adjust it. That's, it's not an issue. Okay, so now, so this is will be a area for support, and this is the area for resistance. Okay, so now I'm gonna move the chart. So remember, when the price is going up, it will have, say for an example, 10,000 buyers here. Okay, and when here the 15,000 seller. So now one time it went up, because the sellers were so high, the price will come down. Okay, but then again, these buyers will gather like more people, let's say get like 10,000. Okay, now the buyers are more, seller are less, so this will like win the war, and then they will break this trend, break this resistance. Okay, now what happens is, now you have the 5,000 here, 5,000 buyers. They will not let the price fall this below. They will do some profit booking, but they will again try to buy at this point, because now this will act as your support area. Okay, so always remember, whoever was support can become your resistance, and whatever was resistance can become your support. Okay, always the point where it was support earlier now is a resistance, point where it was a resistance now it can act as support. Okay, so this one can be act as a support as well as resistance. Okay, so if the price falls from here, it will test it, it will go down, and then it can fall as well, or it can go for the new journey. In the case of Amazon, if you remember, what did I say earlier? If Amazon, this was the Amazon, if Amazon goes up, because this is the resistance area, the price will go up little bit, and then it will come back and test this area, which is very crucial area. Okay, and if the Amazon sustain that area and it start making a bullish move with a bullish candle, you can go long, and it will give a good return for the swing trading. Okay, you can buy the call as well for the little bit, at least for a month or two. Okay, does it make sense? How does the price works? This is how this is all about price action. This is not about indicators or anything. This is all price action, how the price reacts. Okay,
Yeah, makes sense.
okay, now that was the horizontal line. Horizontal line gives like a support and area. Now how does the trend line works? Okay, how does the trend line gonna work here is, if you see this trend, because I'm seeing the trend line after a long time, like like Amazon, I haven't been following Amazon. So this is the price, this is the trend line, and this is also a trend line. Okay, if you are like kind of finishing nicely, so if you see here, when price came back, like when the price broke the trend line, because it was making a higher highs. Okay, like if you see the higher highs and higher lows, and when it came back like here, it broke the trend line. Even though it was a bullish, it did try to kind of what you call, taste it again. Like here it fell, it went, tasted again, then it fell. It didn't fell like boom, it fell, goes back up, and then falls. And see what I was saying on the bottom, you will see the long wick. What does it mean? There is a chance it will go up, and where you go when it gives a closing below, like above the close, like a high. So you can go above here, even here, and then you have to hold it. Okay, does it make sense?
Yeah, totally.
Okay, totally right. This is how the price works. Okay, this is all about how the price works. Okay, even here if you see, and after this one, like did I say this part earlier? If you see that part here, it acted as a support, because price didn't close it below that level. So if you have put your stop loss here or here, it would have not been triggered. Now you trail your stop loss from here to here because this is your next area of support. Okay, because you don't know here what's going to happen. Okay. Now, once your price goes up, it broke the trend line. Now, if you have the Amazon, this will be your kind of more of a support area. Okay. Does it make sense? Because the price not gonna fall below that line. This is like a, so you are getting two confirmations. You have the price which is supporting you, like from here to price is gonna support from here. Price. So if you put like conservative 3225 should be your next stop loss. If you are longer, you bought it from 1700, even if it's triggered your stop loss, you're still in a good profit.
Yeah, that's good. Thank you.
Right.
Chicken, one question.
Yeah.
When the hammer is formed, whether it's a straight hammer or is upside down hammer, does it make a difference?
Which one? This one or this one?
Any hammer, which is upside down.
So this is like a inverted hammer. Okay.
Yeah.
So who is in control here? Just I asked the basic question. Who is in control?
Okay.
Who is in control? Just ask the question to yourself. Who is in control?
Right now, the bull in control.
No, bulls are not in control.
Sellers.
Sellers are in control. Why? You see the big long wick.
Okay.
Always look for the wick.
Okay.
Hammer. There's two hammers, right? Like one is upside hammer and there's a bottom side hammer.
Yeah. So if
every
you see
time
there's
you see an upside hammer,
this
you
is
always
the
want to
first
go
hammer
bull.
is upside, right?
Yeah, this is the hammer
Right.
and this is the inverted hammer.
Okay, that's inverted hammer.
Yeah. Color doesn't matter. Okay.
Okay.
Forget about the colors because we are stuck in the color. Color is just the indication who were in the more in the market. But when you have the long wick, but this is even the red, buyers are in control because they are getting the price up. Okay. What happened here? Let me, if you wanna like this section, this price, okay, this is like a day trading. So let me just kind of draw a line here.
So Jigar, as we discussed that, you meant that, whenever the wick will go down, right? So it means there will be buyers who will be coming into picture, right?
Yeah. So like, this is the day trading. Okay. I'm gonna come to your question. Hold your question. I'm gonna come to, you might be get the answer here. So this is the day time. Okay. Let me go to the smaller time frame for the 5 minutes. Okay. Because I did draw that line. So can I see? Okay. This is the area. Okay. This is the 5-minute chart. Okay. Now look at here. This is the how the day work. Because when you're, what did form here?
Means there are more sellers, right?
No, yeah, it was a seller, right? It was a seller. But now if you see this area, I'm gonna remove this triangle now, hide it. If you see this area, like this area, if you see the wick, you started seeing a wick, okay? And it made a doji. What did I say? Doji, when it form on the bottom, it's more powerful. When you buy it, once the high of that doji is broken, you go long. This is the big like doji. This is like getting support. You go long. And again, market when it goes up, it will come again to test it. Okay. That's why your stop loss should be here. Okay. Do not keep the tight stop loss. Otherwise it will be like somebody will come and trigger it. Okay. So here, let's see, draw the line here. What was here? See, and when you were supposed to go long, if you were a day trader, here, you could have gone here, but your stop loss would be here. Okay. You would have gone long at 2906 or 2914, whatever the time you want to get in, but your stop loss would have been less than 2984. Okay. So what was the risk reward? You were risking $10 and you would have got at least $83. So you had 1:8
risk reward, which is pretty good, right? If you are like playing the call, you would have made a lot of money. Okay, does it make sense? But it requires patience. Okay, it requires so much patience, very much patience. Okay, day trading is not like you go every 1 minute. You go on a time when you want to get in. Don't let the market decide, because the mistake which we do is like, oh, I'm gonna lose, I'm gonna miss out the trend. No, there are many opportunities in the market. Okay, market was there before you born, market is here when you are born, and market will be there even after you die. Okay, remember that part.
So, Jigar, when we were looking at the day chart, right? So, we checked that the week was, going in the downward trend, which means there were a lot many buyers.
Which one? Where? Here?
Yeah, but
No.
the next.
No, week wasn't downstairs. What did I say? When you have the longer week bottom, that means you have the more buyer. When you have the week on the top, then you have more seller in the control.
Yeah, sorry. Yeah, more buyers, which means the price will go up.
Yeah.
But when we look at the next body, again it's in red, right?
Yes.
Which means again there are so many sellers.
Yes.
So isn't it different that when we say that in the first week that there are so many buyers?
So
but
now
the next
here,
one.
okay, now here there are how many different kind of traders? One trader is a day trader, another are the swing traders, another are like a long-term trader. What did I say? If you are a day trader, you will just focus on this only one day. Okay. If you are a swing trader, when you go in, this is doji. Okay, now you are looking for a day candle, you're not looking for the 5 minutes candle. If you are a swing trader, you will go long on this one. Okay, and your stop loss will be here. Okay, just give me a minute. So I will kind of cancel out everything, so you will have a better idea. What did I say? Once you will get the closing above the doji candle, you need a confirmation candle. If you remember, I said as long as you get the confirmation candle, confirmation candle doesn't come on 1 day or 2 days. It will sometimes take some time. Okay, once you get the confirmation, you got the confirmation here, then you go long, and then you can put the stop loss here, or you can keep your stop loss here if you want to really go for a 5 days or the 7 days or the 10 days. Okay, does it give the answers to your question? What I'm trying to say, swing trading is different, investing is different, and the day trading is different.
Yeah, and I would say Amazon and these kind of stocks are not really good for day trading unless there is a.
They are good for the day trading if you're buying calls. If you have the big pocket, you can buy the call.
Or there are results coming or any news expected, then definitely.
Yeah. Right? Got it? Did you get your answer?
Yeah.
Okay. Good. So now, because it kind of, if you see here, this line is more of a support because it's coming here, taking a support, and then it went up. So what I was saying, it goes up, and this was the M pattern. People should have dropped. Once the price dropped at that area, many people would have bought like the puts. But then they look at the price took the support from that area and it went up. Okay. So doji, whenever you have the doji, always look for the confirmation candle. Okay. And if you are doing a long-term investment, you don't have to worry about all those things. Okay.
So Jigar, just to sorry to interrupt, just to tell one thing is, let's say you are a day trader, look for 15-minute or 30-minute candles, then 15-minute candles, and then 5-minute candles. That will give you 100% confirmation what's the trend is going to happen next 5 minutes, 10 minutes, 15 minutes, and you will always get a profit. If you are a swing traders, you always want to go for a day to a week and understand what is, how it looks like, the chart perspective. And let's say you are basically investors. So as an investor, like I'm also one of the investors as well, right? Like I usually invested and I forgot it. I don't have any stop loss. If that, like, if the market falls, I usually buy more, because as an investor, you have looked at the fundamentals of the company, and you are not looking at that stock to, even if it's falling down, it's an opportunity for you to buy more.
Yeah, makes
That's
sense.
what you usually look at it. As an investor, you should never have the stop loss. I mean, it's good, if it's good, you want to take a stop loss and take the profit out. But as an investor, my personal choice, like, if market falls, that's an opportunity to
Yeah,
buy
don't book
instead of
losses. Yeah.
exactly.
Yeah,
Again,
but
this is my personal choice.
yeah, I totally agree with you. But one thing that really, I think very important for an investor as well, gets really difficult to find out the best entry point, right? Because sometimes you buy
That
and you again figure out that it's going down and down and down.
Right. So that's where the chart pattern, what
Yeah.
Jigar is saying, right? Like for 1 year, for 1 day, for weekly chart, daily chart, all these things will help you to understand. Like, hey, you know what? There you go. Before 1 year ago, this is how the support was. Jump in. That's where you want to buy it and keep it for long term. You can wait for a little bit longer and see if that support that works, and then buy. So it's again, like, what Chicker is doing is, I mean, like, even I'm now focused more on the charting perspective, because I'm not a day trader, and now, like, he's basically pushing me to day traders, and I'm happy.
Thanks, Azul bhai.
Thank you.
The issue for everybody is like where to buy the stock if you are long-term investor. Always,
Yeah.
always 20 moving average, monthly basis or the weekly basis are the best entry for you to buy for the long term. Okay, so we are not gonna touch that one later, but like this is like Amazon. I'm gonna put it on a monthly basis. Okay, let's see. The black one is like 200 moving average. The pink one you are getting is 18 moving average, which is close to the 20 moving average. So what was the good buying point for this one? Was here and here. Like this area was basically a good buying point for a like a long-term investor. If you are like a swing investor for a couple of months, this was a good area, this was a good area, and this is still a good area to buy the Amazon. Like it was a good area.
कहाँ जाना है?
Okay.
भाई को दूध डाल के देखेगा भाई.
I'll be more interested in knowing about Tesla. Is it a good time to enter more in
No,
Tesla?
no. Tesla is like everybody's darling. I know.
हाँ चावला
Yeah.
उसे बता दे भाई को.
So I was thinking to increase my,
Tesla,
investment in Tesla. So yeah, just wondering about it.
Tesla is here.
And how about Roku? Do you think that would be a good investment point?
Because like now, like so far, we have covered like we're gonna cover moving averages next time, like how to I kind of check those on how to identify trade if it's over like higher highs and lower lows. We kind of touch base on those one. CPR we're gonna take later because it's kind of good topic to cover. Time frame we covered, support and resistance we covered. Let's talk horizontal lines and the trend line. We did kind of covered how you draw it, and supply and demand zones. I'm gonna talk now, and let's take the supply and demand zones on the Tesla, so that way we can understand it. Okay, I'm gonna close everything else. Okay, nothing should be there on the chart. Okay, this is good. Now, okay, so this is Tesla. Okay, how it's supposed to, like, I'm gonna go daily, make it easier for everybody. And if you see here, I'm gonna draw the trend line. See, okay, now once you draw the trend line, try to adjust it. Okay, and the trend line is also will be your supply and demand zone. Okay, this will be your supply and demand zone. What does it mean by is like there are more buyer praising. It's not like resistance. When you say the support, it will be like one line, but when you make it a zone, whenever you draw this kind of zone, that means it's like a no buying zone. You don't buy. Okay, you don't buy or sell at that day. You just wait during that trend. Okay, so now this was like a Tesla, and if you see, it's like making a nice pattern. Everybody probably will agree. Herschel Bhai probably will agree with me as well. Say is making like a 1, 2, and a 3. So in case anytime if Tesla breaks what this one, I would say 650 level, you will see the 580 and here this area probably, yeah, 541, and after that one will be next stop 469. Those are for will be the level for Tesla. If it falls, then break line, right? Because this is a very strong like a break, very strong what do you call support zone on the trend. It's making a head and shoulder pattern in a weekly basis, which is very strong pattern. Okay, if a head and shoulder in a like 5 minutes is not strong, but it's making a head and shoulder on a weekly. Okay, because if you see, this is a shoulder, this is a head, this is the shoulder. So if in case if it falls to the 665 667 level and it breaks that level, you will expect 589, 605 and 589 level for the Tesla. And if it breaks up, like always, don't be bearish, don't be bullish, be a neutral. Okay, don't assume that, oh, it's gonna fall tomorrow. No, prepare what's gonna happen tomorrow if it goes up. If it brings and gives closing above 744, okay, this is the level. I'm gonna remove all those brush. If it's breaking, like, gives like a here, this is like a strong support, like resistance area. I'm gonna make it more nicer. Yeah, so if it's making 784, if it goes up, this will act as a good resistance, 784 area. Okay, does it make sense?
Jerry, can you explain this again? I said that.
Okay. Okay. So if you see, this is the trend line or the this is called as a supply zone. The green part you are seeing is called a supply zone. Okay. What does it mean is like buyers are willing to buy at that particular price range, is not able to break that trend line or a supply zone or the demand zone. Okay, sorry, this is a demand zone, not the supply zone. This is the demand zone. People are buying at that particular level. Okay, the red part which you are seeing here was acted as a support earlier, now acting as a resistance. So how does the market fall? Like this was an M pattern, it fell and then it tested again and then it fell. Okay, so the chances of it might go up and fell again, or it might just go start a new journey. We never know. Nobody knows what's going to happen on the right side of the market. What we are doing, we are assuming according to what is on the left side. Okay, does it make sense so far?
So what you have drawn was the exact pattern you're gonna see in Tesla as well.
Yes,
it's gonna go further up, but it has to break that resistance first, and I believe the resistance might just fall, break if the Tesla comes with the news or anything. So anytime, see, all the stocks basically have two important things, right? Like either it's a stock or either it's a market total, or like overall. If the company if the stock has just a regular pattern, right, there is no news, there's nothing, then you can basically go with the chart. If there's news coming up from the company, then you always see that whatever the resistance is, it's trying to go and touch it or break it. So in this situation, like for the Tesla, I can see it's going to go again, touch that red line, and it's going to come back up, and and either it's going to go further up or it's going to go further down. The chances to go further up are more, but again, it's going to go only to 800 and something, whatever the above part is, and then it's going to again going to come down. So that's the pattern of what I'm looking at on the day trading for the Tesla as well.
Yeah, thanks for
the above M pattern, what you see
Yeah,
there, right?
yeah.
That's
This is
the
the M pattern.
yes. So that's the one. If the resistance break, it will go further till that point.
Yeah.
And then if that breaks that one, then it's going further up. But I
Yeah.
don't think it's gonna go break that one
Yeah.
for sure.
Because the people who are stuck here gonna come back. Okay, they're gonna
Exactly.
start selling it. Okay, people who are stuck buying here, like they will. Okay, they like look at here. So people bought it here, like this area. They bought it here, and then they offloaded their positions here. Why? Because they just want to break even. They don't want to kind of stuck for longer, and that's how it goes. But again, every time if you see here, like this area, I would say, like, see, buyers are in control. Buyers are coming into control. This is like bullish engulfing. This is bullish engulfing. So the chances of it to go higher is more. But what is going to happen? 745 and the 780 will be big resistance for the Tesla for the next week. Okay, because there are so many sellers who will be like trying to take the short Tesla or offload their positions at particular point. Okay, so next week you will see the new level for Tesla about 740 and 780. Okay.
Okay.
Yeah. So
Yeah, go ahead.
It's okay. Go ahead. You were asking
yeah,
something.
I was just asking that. I'm just trying to understand the difference between the. We understand what's the support is, what the resistance is, as you explained it. So I'm just trying to understand the difference between support resistance and the supply and demand zone.
Yeah.
How do you differentiate
Okay.
between these two?
So when you have like a so many weeks, right? You know, if you see every time if you see here, like you see there are like so many weeks, right? So many people, it's like a tiny area, and then it's bounce back like here, like starting from here, like I'm gonna say here, like you will see like it's reacts at particular point, and when it reacts, like if you see like every time when it comes to that area, it reacts. So this will be like area of interest. Forget about the supply or the demand zone. It will be called like area of interest. If this, like say for an example, Tesla falls from here, then it will be very difficult for Tesla to go up from that point. Okay, because this will be the area of sellers. Now this the green part you are saying is area of interest for the buyers. Okay, always don't confuse get your confused with the supply, demand, anything. You look at as an area of interest, because this is like a very general, people know support and resistance and supply and the demand zone. That's why I kind of use that one, but this is area of interest. Always look at the area of interest. If you want to go long, okay, yeah, from here there are so many buyers, it reacted so many times, let me go long. Oh, so many people have sold at that area, let me go short. Okay, supply area is nothing but where the buyers are willing to buy at particular points. You will see many buyers. Let me see if I can put the volume here. Yeah, let me see. Okay, and let's see how does the price react on that particular supply or the demand zone. Okay, so if you see here, look at the volume here. You are I'm just comparing the volume, bringing closer. Check this one, right? Buyers. Okay, look at this one, buyers. Like from it reacted here, but look at the volume. Okay, look at the volume here and what happened on the volume here, right? Because it reacted on that area. Let's see here, say here, sorry, here it reacted because volume is increasing, right? Always whenever it's kind of only here, volume did not increase, reacted. Look at the reactions here. Okay, I never pay attention to the volume, just to kind of give you a heads up. I don't bother about looking at the volume, but I'm just trying to explain you how you can like decode the volume if you want to. Okay, volume is better specifically when you want to day trade, but if you're a long-term investor, you can see the volumes are coming, a supply zone is coming. Now let's say the seller, so this is the seller area. it reacted here. Look, volume dried up, and then the next day, because it broke the support, it volume increased and it was going downward, right? So this is area of interest. Wherever you see those support and like a supply, the trend line on the horizontal line is kind of reacting, that's where you want to get in or get out. Does it gives the answers or still need some help to explanations?
Jigar bhai, thanks for the explanation. Yeah, it
Okay,
makes sense now.
makes sense, right?
Yeah.
Okay. Any questions so far?
Another question. So, this latest correction. So, by looking at the charts or any other indicators, could we predict that this might have correction or maybe a potential crash must be coming sometime? So, how does it help?
Index Dow Jones. Let's see Dow Jones. Okay. Dow Jones. This is the one DTX. Harjul bhai.
Yes, yes.
Or the DGX, right?
DTX. Yes, DTX.
DTX. Okay. Right. So now if you see here, okay, let's go for the monthly. Okay, always look for the monthly. Okay. Do you see any sign for the weakness on the market? I'm not talking about the particular stock now. I'm talking about the market itself. Okay. Do you see any sign of weakness in monthly basis? Okay, it doesn't show. Let's see the 20 moving average. Okay, the pink one is like 18, which you can term as a 20. That's okay, right? Okay, it's kind of above the 20. That's good. Look for the weekly. Let's go weekly. Okay, do you see every time price came to the 18? Let me just change it to the 20. Only one moving average. Like I'm gonna style to input is 20, which is one. I made 2. This is 20. Okay, right? This is a moving average, 20 moving average, and this is, sorry, I'm gonna change this one to 20. Okay, and I'm gonna change to the black one. I'm just gonna give you an update regarding the exponential moving average and moving average. The red part you are seeing is exponential, and the black part you are seeing is moving average. Sorry, black part is exponential EMA, and the red part is a simple moving average. Now, every time if you see, this is on a weekly, okay? Whenever it comes on that part, it reacts and it goes up. It reacts. So this is where you can get in. Okay. So this is the best part if you want to go long. Okay. So now,
so I don't know who asked that question,
yeah.
but like just to give you a heads up is based on the chart. No, there is. I don't think so. There will be any downtrend for, for pretty much end of this year. Okay, there will be no downtrend. There will be no crash coming for sure. Okay, based on the chart and based on the news as well. Yes, if there is new something big happen, like the time every time the crash happen, either there is some kind of thing happen, like there is a disaster happen in
Yeah,
the
right.
economy, then only the market will react. But in this situation, I don't think there is, like, the disaster is already done. Now preventing is already working on, and based on, like, if you look at the market perspective, right, or even the jobs perspective, the jobs are getting better, the market is getting better. So based on that, I don't think that's anywhere it's coming down. Yes, you will see again in December or January somewhere again, but that's a correction. It always happens every time in January, February, March. That's a 2-3 months where the market will adjust, but then again take a new high and go further up.
Okay, right, perfect. So it means whatever profit booking we had done, and we might be sitting on some cash. So you think in next dip, it's the time for a mid to long term investments back?
But they think about this way, right? What he's looking at it is the Dow Jones, Dow Jones or S&P 500. That's an index. it's a big term invest. So if you are investing in the indexes, right? That's absolutely fine. You can go for long term. Absolutely okay with that. But going on the stock, you have to go back and look at the stock,
Right,
by
right.
yourself.
Yeah, that's true.
Thinking
I
about,
understand.
that's two different things, right? Like indexes, it's gonna go further up. Stock, it may come down and it may go further up, because stock always reacts on the price and always reacts on the what is there in the near future they are coming up. So like it's two different things. I want to make sure like we all understand, like market gonna go up, but that doesn't mean like S&P gonna go up to 4,300, 4,400, but that doesn't mean Tesla will go to 3,000, $4,000 in the next year,
True.
right? So think about that as well.
Yeah, totally agree. Thank you.
Yeah, thanks, Asul bhai. Now, if you see, this is the day trade, and this is like a. I'm just gonna close only MA. Gonna keep in 20. Okay, the red part is 20. So whenever you see the 20 moving average, the price reacts. So, and let me see, this is 50. Yeah, MA3 is 50, and I'm gonna make it black. Okay, okay. So whenever you see the black one is 50 moving average. So what does it does is like for last 50 days, it takes the average of the price and then it reacts. So I'm gonna turn off the 20, keep it 20 here. So here, if you see, if you are like buying longer, like this is like a good buying point because it kind of take a support from the moving average. Moving average works as a big good support and the resistance. So this is a moving average. This is, and after that, and look, it has ready. Once the moving average breaks down, you get out. If you are bull, if you are want to go long, once the trend is up and the price is breaking the moving average from the bottom to the top, you go in and you be in the trade for any. This is like basic for any stocks or anything. Okay, it's basic for everybody. So once the price is crossing of the moving average from the top to bottom, like it's going up, you can go long. Once it breaks this down, you go short. That's basic understanding. You need to know how you can go in and out. So every time if you see, this is the 50 moving average, which is more powerful than any other moving average. Like 200 is more powerful than the 50, and the 20 is less powerful than the 50. So as I said earlier, bigger the time frame, more the powerful the price reacts to that area. Lesser the time frame, more noise it has it. Okay, so whenever, if you see here, I'm gonna say how does the price reacted. Once the price moved on the 50 moving average, and it was a March correction, but every time if you see price falls, try to come back, gives the false signals and coming back. So price react differently every time it goes to the moving average. It will go either like too good or too up, and you're seeing the smaller candle because this is the daytime. Okay, and if you see the point wise, this is almost 10% increase, and when you see downside, you are seeing like almost 5 to 6%. So this is not like a one, and this is like almost 66 point at the time. This is for Dow Jones. This is DTX. This is not a index. Dow Jones is like a 15,000 something. Let me see S&P.
Look for SPX directly.
Yeah, SPX. Yeah, let me just look because this is different. SPX. Yeah, this is an index. Yeah. So even here too, right? Look at this one. Price reacted to the 50 moving average. I'm gonna remove this trend line. I don't need it. See, there is no weakness in the market. Okay, there is no weakness. It's making a good, like S&P making a good pattern. Okay, this is making a good pattern here. What the heck is happening here? It's making a good pattern. So if you are in S&P like a SPY or something, two-way, like if this is the, like I'm gonna line, this is my area of interest. Okay, good. If the price breaks down like a 4127 and 4218, those is like, it's gonna be like in between. If it goes down, you will see the corrections for the even S&P up to here, and if that got done, you will see the correction here. If not, then you will see increase how much? 3-4%, which is from here. 3-4% will be here, which is, yeah, you will see the 430, about 444 for the S&P. If it brings like, if it can break the trend, this pattern, this is powerful pattern. It's called Pannett pattern or the symmetrical triangle, whatever pattern you want to say. I don't go by the name. I just see how it works for me. You don't have to remember anything. You just need to see how it works on the market. Okay, so this will be your S&P for the next coming months. If it breaks down this level, even this is very important level too, because when you go now, this is on a daytime, okay, because now if you have to go on an hourly basis to see for the day trading how the market gonna react the next week. Okay, I'm gonna close this moving average, and if you see here, I'm gonna like close this one. Okay, now when you are doing day trading, you're gonna, as I said, you adjust your trend line. So here, and then again you have the new trend line coming in because you are doing day trading. So if the market, and this is like a more of a consolidation area, if you see here, more of a consolidation. So if the market breaks 4192, which or like 4193, you will see 4218 and the 422 for the next week. Okay, if the market fails, you will see the 4162, and if that fails next week, you will see 4154, and if that fails, 4127 in like next 10 days. So don't be like, okay, it has to go up. Market doesn't work the way you want. It will go the way it wants. So you need to be prepared for both sides. So this will be your level for the next week, how it goes. And if it goes like smaller time frame, it will probably act as a same. Like if you see here, this is more of a consolidation. See, so now when you go day, and then you can take out extra like a noise, because you have the more noise when you go for the smaller time frame. If I go for the down 5 minutes, it will have a more noise. Okay, so but if you're day trading, 5 minutes is better, 5 and 50 minutes are better. Okay, so any questions or concerns so far?
So Jigar bhai, just asking for your personal recommendation. So, regarding Tesla, what do you think should be the, correct exit point for a long-term investor as well? As you mentioned that, it may go down, and there's a, highly chances that it may reach 780. So just asking your, suggestion on that.
Like say, like it again depends like how long you want to go, right?
Yeah.
Like as Harshul mentioned earlier, like when you are an investor, you're looking for like 5 years, 10 years down the road. You're not looking for a 6 month or time. So whenever you find your particular stock at good moving average, whether you're getting weekly 20 moving average or a 50 moving average, that's the good time to get into the stock. Okay.
Yep.
But sometimes what happens, it doesn't work the way you want, then you still buy only 25% of the investment and the wait another for the 25% if it dips down. Is a good stock? Yes, it is. Is it overvalued? Yes, of course. Of course. My personal view will be like, for if you get it at 550 level, is a good price to get into the Tesla, which should come around June. I might be completely wrong.
Okay, so you're expecting it to be somewhere close to around 550 in June, and you were telling something about 780, right? So do you think that
next week? That will be the next week.
Okay, so do you think that that should be the right point to exit for the time being, and then buy it again when it falls down? Or
it's a Tesla, it's a beast, right? One that Elon does some like a tweet in the morning, 4 o'clock, Tesla will go through the 1,000 in a day.
Yeah.
Right. So there are so many Tesla lovers, right? And so That's why I say, like, if stock wants to go up, no resistance will work. Okay. If it has to go down, no support will work. So it will be like up to you how much your risk appetite and how much you are willing to lose on particular stock. Then you go in. Okay. You won't be able to get the top and the bottom. Never.
True that.
Okay.
Yeah.
So any more question? Because like we have 5 more minutes in this sessions, and then I have like a break for like half an hour, and then the second batch is coming. So I just wanted to make sure if you have any questions or concern, we can kind of go through pretty quick.
So in your agenda today, I think we had a few other things. So are we going to talk about them, or?
This will like a moving average, and this one we're going to talk about that one next week.
Okay.
Because that's why I say like a 2, and it's like a more. This will like when you want like moving average and exponential, I kind of touch based on those one. How to identify trend, we did kind of had a touch base, like you always look for the higher highs, higher lows, or lower highs, lower lows. That one you will understand when you look for the chart. Okay. For me, it's very easy to explain because I live and breathe. I spend at least 4 hours behind this chart, so I talk to the chart, right? More you spend time with the chart will try to talk to you. Okay. That's why I say tukkas, because it's all tukkas. Nobody knows what's going to happen tomorrow, right? I might be completely wrong, I might be completely right.
So can you tell us where to find that microphone that you can talk to charts?
It's on the trading
That's a
view.
special microphone.
More you spend a time on the trading view, more chart will start talking to you without the
that's
microphone.
right.
It doesn't need. It's a sign language you're gonna learn.
Yeah, thank you. Definitely.
Right. So, and CPR, Bollinger Band, Fibonacci, opening breakout, or the golden crossover, those are the more of a day traders perspective, right?
Right.
But
No,
moving
I
average
think
and
it has. Yeah, it has been a very informative session. So at least me, I learned a lot.
Yeah, I'm not sure how like seasoned all the traders in the groups are. I know a couple of them are like very seasoned, and I don't want to name them, right, Harshal bhai? He's my guru,
No
by the way.
comments.
He's
No.
my guru. He was the one who
you did very
explained
good
me
job.
options. Yeah, he was the one who explained me on the options. So any more questions, guys? Just let me know, and then we can wrap up the session in like next 5 minutes. Okay.
Yeah, Jigar bhai, one question.
Yeah.
Yeah, for the day trading, so 5 minutes candles are the best, or 15 minutes candle chart? Which one is the best?
Both are the better. Like some of the strategy works on the 5 minutes, some of the strategies works on 15 minutes. The strategy which we're gonna discuss next week are for the 5 minutes. Okay.
For both day and swing, right?
Yeah, swing is also you can do it, but swing is like you get in today and probably get out like in couple of days. Okay.
Okay.
Hi, Jigar. Jigar, one question, please.
Yeah.
You mentioned a few indicators that are good for day trading. Can you repeat those, please?
CPR, moving average, exponential moving average, and these are the good. Yeah, that's it, because those are the strategies. So yeah.
So for day trading, it is CPR, moving average, exponential moving average,
and Bollinger Band.
This Bollinger Band and Fibonacci.
Fibonacci is like a tool. It's not a day trader, but it's a tool for the confirmations. Bollinger Band is also a indicator for the confirmations. It's not a tool. It's just the extra confirmations. Okay.
Okay.
But most of the time, support and resistance, trend line, horizontal lines, those are the one which gonna help you to identify the trend.
Okay, wonderful. Thank you.
Okay.
So Jigar bhai, any update, any insight on swing and long-term traders? What would be the right indicators?
So moving average, whenever you get the moving average, okay, say for an example, and you see the moving average reacts, okay, is always react. The price reacts to that moving average. Whenever you see this kind of pattern, like this kind, get in. Okay, if it's a stock or something, like see here, this is on a weekly. Okay, weekly is more powerful.
Right.
If you are getting like 20 moving average, you can be like be in the trade. Okay, buy the 20 moving average on the weekly basis. If you're getting 20 moving average, go for it That is where is 20 moving average. This is MA2. This is free version, so you can use
You are
it.
on a week. You are on a weekly.
Yeah, I'm weekly.
Jigar.
Weekly is more powerful. Monthly
Okay.
is like best. Like monthly is better. So
Yeah.
like just kind of give you like a how you remember who has like a more experience, whether you, your dad, or your grandpa. Who has the most experience? Like who has seen everything more?
Grandpa.
Grandparents, right? And then your dad, and then you. Okay. Now, say for an example, you don't have the grandparents, but now who has the more knowledge? We have when you're doing day trading, like swing trading. Your dad has a more knowledge or the experience than you, than your son. So the bigger the time frame, lesser the noise. Smaller the time frame, more the noise. Okay. So if you want to go longer or the swing trader, ask the bigger time frame what he is trying to tell you and go for it.
So Jigar, what I understand is that the moving average is the key indicator if you're going for say long term or doing the swing trade.
Yes, that's a key. It knows how the, so when you say that 20 moving average for the weekly, that means it's the averaging the price for the 20 weeks. That's almost 6 months. Right. When you are averaging the 20 months, that's almost like a 2 years. So whoever invested like the big money, do you think like they're gonna just let the price go fall just like that if they are long on the particular stock? I don't think so. Right. For us, we're not even able to move like a 1 cent. Okay. Even we
Jigar.
get together, we're not even to move 1 cent. The big money is moving the market.
Jigar.
Yeah.
Just enable the 200 here as well, EMA. So at least people will understand, what is exactly, how you are looking at it. So 220, keep both of them.
Okay. Let me say EMA. Okay. I'm just going to change.
Yeah. Go with the EMA.
Okay.
220.
I'm going to show the difference. 50, how it works. 100, and I'm going to show 200. Okay. Now remember the color. I'm gonna change the color. Smaller is green, just to kind of make it easier. Then the red, then blue, and then black. Because I always like the more higher time frame, like a black. Okay.
And also, please explain, Jigar Bhai, the
Okay.
difference between exponential and moving average. And
We will talk that about next week. Okay.
Okay.
Exponential is like in a nutshell is more reactive to the price, which conclude the last price like a more importance than the previous price. The simple moving average averages out from the day 1 to day 10. Okay.
Okay.
So now here the one is 20, 50, 100, and 200. Now look at the price. 200 provides the most like support every time. Okay. If you see here, price to fall below the black line which you are seeing every time. If you see, this is on a weekly. Okay. Price reacts to the 200 faster. Once the price move less than 200, there are chances it's gonna go down. Okay. Like see here, and whenever you see on the longer time frame, this is called a golden cross. Okay. When all the prices are like coming together, crossing each other, and the 20, 50, 100, 200 are on a like a line, that range is a golden crossover. Okay. So this is weekly. Let's go for the daily. Okay. Let's go for a daily. Look at this one. Okay. Now if you see here, price is been like over 200 and now is getting support from 100 all the time, right? It took the support on 100, support on 100, now taking support on a 50, right? Taking support on a 50. This is S&P. So there is no sign of weakness, right? Because bigger money who went in doesn't want the price to come down. Okay. Does it make sense here?
Yeah, Jigar, just a question.
Yeah.
Can you mention any of those things that you use? Basically, what are the resources that you use to determine the catalyst or to figure out what's the important date? or something. Like for example, like Apple. Obviously, Apple announces their important deadlines and dates ahead of time, just so like they're releasing the new phone. Or how do you find that data for Amazon or AMD or Facebook or any of those other big tech companies or any of that?
Okay,
So how do you find those?
So usually when you see those prices, like anything, always price will kind of go either, like if you will see the price going on a range, okay, you will see that there is a range. It's not going up and down because big money are buying the price. Okay. So always remember that whenever this one happens, the price are changing. The price are like accumulating, and then either it will break up or the down. Nobody knows. Okay. Unless you get the good confirmation, bullish or the bearish candle, then only we know that okay, now it break the trend. Or you go to the unusual volume. Unusual volume will be like a good trick for buying. But for me, like I am like more into like swing trading, right? Like buying on options and everything and trying the different strategy. So I will be looking into like how the price reacted last week and how it might react to the next week. That's what I usually look for.
So you don't have any other tools that you use to determine the important deadlines for the companies?
No, I don't have it. Sorry, I don't have it. If somebody has it, please share it. For that one, I think Sifan in the group is like he has so many subscription and he reads a lot into this like a deadlines and everything. So he's like more pro into this one. My like knowledge I'm trying to gain is all on the chart. For me, I feel like chart has the more story to tell. News is always like in fact factored in. You will see the people will be buying before the news breaks out because bigger money knows how the gross the stuff is going.
I think you can ask that question in the group.
Yeah.
Any of the group, and somebody
Will respond,
definitely
yeah.
will be able to give you an answer. So, just put the question in the group again, and I will give you some of the subscription names which I used to follow or which I'm still having the chance to follow with them. And some of the subscriptions are pretty much expensive, but they give you the same indications what you need. Like, hey, there is some noise is coming on this particular stock, go buy in, and then you can just take the same advantage of others who are taking it. Okay, so any better, if you ask the question in the group, and definitely somebody will be able to answer that as well.
Yeah, I think we should respect the time. I
Yeah.
guess the Jeevan needs to go and take a break before the next session.
Yeah, guys. Yeah. Any question, please ask in the respective like groups, and you will get answer for sure. There are so many peoples in the group, and good luck for the session. I hope you will got some informations, and spend some time on the chart, and you'll get more informations next week. Okay.
Okay. Thank you, everybody.
Thanks.
Thank you,
Thank you.
Jigar bhai. Thank you, Harshal bhai.
Thanks, Hartul bhai.
Thank you.
Thank you.
And thank you, Shahid, for arranging.
Thanks. Yeah, he's
Thanks,
all.
Shahid.
Yeah, is he still in the group or sometimes he comes in and comes out? He's
I
busy
think
guy.
he's still there.
He's there.
Yeah, I think so. By the way, Jigar,
Yeah.
very good session. Okay,
Thank you.
I'm very happy.
Thank you.
Actually,
you so
I
much.
learned a lot today.
Nah, bye. You know a lot. You know a lot. I know. You just like so like no polite with me. If you wanted to rip me off, you could have, but you can spare me.
Very good, very good session.
The best part of Jigar is the best part was that today I came to know why I'm losing so much money here.
Everybody loses money, okay? But
you learn from your mistake, man. Let's
yes,
accept that thing.
yeah. So
Until you accept your mistake, you will not learn.
yeah, that's true. But you need to accept that okay, this was the mistake. Some
Yes.
people doesn't realize that was a mistake. That's the issue.
Actually, the point is we need to learn from others' mistakes as well.
Yeah. Then it costs less. Okay. When you learn from the other's mistake, it
So
costs
you
less.
can talk to me. You can talk to me. Learn from other mistake.
Yeah. Sure. Share your experience, and we'll sure learn it from you.
Yeah. Thank you so much.
Okay.
Thank you so much, guys. Yeah.
Have a good one,
Thanks, bye.
everybody.
Bye.
Thanks, bye.
Bye.
Bye. Ah.